Good day. Ira Epstein with your financial market wrap-up, and this is now for Tuesday, the 10th of December, 2019, and it's been a crazy day. I've been up since 3:30 in the morning watching markets, getting ready for today, and when it all happened, I just sat back and was flabbergasted. Let me explain what I mean. As you can see, the boards are already cleared, so we're going to get into trade for Wednesday, and that'll start up on these charts in a moment. But you had today the passage of the USMCA deal by the combination, a signed agreement between Canada, the U.S., and Mexico. Next, we heard from the House Speaker, Ms. Pelosi, that they were going to go ahead, and it sounds as though the House will vote right away and get that passed. That's what she's making it sound like. We then heard later, and I mean late this afternoon, from Senate Majority Leader McConnell that no, the Senate's not going to take it up, and they may not take it up until after the impeachment trial. So I missed something for you. Yeah, there's going to be an impeachment trial. We saw the group of Congress people come up and say that they believe that they have two solid counts against the president. They're worthy of a vote on impeachment. They believe they'll get it, and it will go to a trial at the Senate. The market didn't really care about that. It was watching USMCA, and then it was watching the U.S.-Chinese trade deal, and there we had another issue that came up. Because at first it sounded as though we were going to get, if you will, an extension of the tariffs that are due to go in place December 15th. What kind of extension? Nobody said, but an extension. And then we heard Larry Kudlow come out shortly afterwards, probably around 9:30 in the morning, 10, and say, no, they're very much still on the table. The president hasn't made a decision. Now, here's your dilemma. We're only going into Wednesday tomorrow, and that's when the FOMC announcement's going to come out in the press conference with Fed Chair Powell. Then you've got the day after, you've got the Brexit vote, and then Sunday night, which way is the U.S.-Chinese deal going to go? If you think this is an easy time to play news, I welcome you to a very confusing time because it changes by the moment. All in all, the weekly area chart of closes on the S&P is held up. It's down 10 points for the week. With all I just said, that's rather amazing. When you look at the action, you almost see where the market's caught between the high up here and this low. And we'll see those numbers right now as you got the swing line pushing up against resistance in the 3150s. Support was all the way back here at the 3069.5 level. And you've got a pattern with the close today of lower highs and lower lows. So in terms of the swing line, just by itself, the pattern is bearish. The definition of bearishness is lower highs, lower lows as a chartist. That's what I use. But I filter the swing line, and I look at where the market's in relation to what I call the line in the sand, the 18-day moving average of closes. And as you can see, we are battling at this number. We've been hitting it almost every day for the past 6 business days. Resistance in the market, because there's no moving average above it, would be at the upper Bollinger Band, 3157. You had it hit last week or so, right in these numbers, fell apart, got to the lower band, and you're thrown back. In simple English, this market is spinning traders around. And those looking other than in and out, and I mean like that, traders are probably frustrated as the market's just trying to figure out what to do next. Going home, the bias is up, as I define bias, and the relationship of the close to the 18-day average, it's over it. The swing line is down. Even if you go up here to 3151 and take out the swing line, and by the way, that would give you the potential for higher lows, higher highs, you're right at the upper Bollinger Band. So where are we in momentum? Momentum in the market is overbought. So you have a market that is overbought because I define any reading over 70 in the slow stochastic oscillator as overbought. I have the bias up and the swing line down. Wow. In the NASDAQ, same picture. Notice this sideways action that's going on. Notice that if you got bearish down here, you got caught. If you got bullish, it throws it back at you. This is a spinning market. Momentum here, not overbought. So we have a market that's got the swing line down, The bias is up, and even if it takes out the last swing line high, you're right into the upper Bollinger Band. That doesn't mean you can't pop, because I still expect a Santa Claus rally. I still don't expect, that's just me, that the president is not going to do anything on tariffs to put them on. Why not wait for the new year? If you're going to do anything, you can give them an extension and then play that game, because you end up with the stock market, at least, you hope that you're not knocking the legs out from under it by saying, now we're going ahead with the full another 160 billion in tariffs and blah, blah. I don't know. I'm certainly not in his, he doesn't write me and tell me what he's going to do. In the Dow, same pattern. Lower highs with today's action, lower low, momentum sort of flat, stuck at the 18-day average, spinning around right here. Next, the Russell. The Russell's the one index that is bullish. It's got the higher lows, the higher high, but it's overbought. It challenged resistance a couple of times to that upper band, slowed down, but it's not shown any sign of even wanting to return to the 18-day average of 1611 to see a support zone. Interesting. In the VIX, as the market hit yesterday, that 18-day average, remember what I talk about so often. When you hit an upper Bollinger Band, often the pros are selling that in premium, looking to get back towards that 18-day average, or they're selling the puts down here, looking to get back to it. They're not playing from there to get up here. They're trying to catch these moves back and forth. That's what I think. Doesn't mean I'm right, but that's my thought process. Well, now you're back up to this number. So the question is, does the market get sold by them again? It's pretty crazy. In the bond market, this is the March bonds. Now, I was noticing the other day I had the D still up, and I've moved to the March. Higher high, lower low. Where are you playing? You're playing right at that 18-day average. Do you really want to do anything into the FOMC meeting? You might, but most traders back away. You're oversold. The trend is what in this market? Down. So you've got the 10-year notes down because you have lower highs, lower lows. But if you take out today's high, the odds strongly favor a return to the 18-day average of closes. A difficult session, because why do you want to be short into the Bollinger Band? I'm not saying you can't, but it's not something I teach in my charting course. When I come to TLT, the popular ETF, what do we have here? Well, if we look at yesterday's range, if I can get to it, I'm hoping I can. That will do it. Yesterday's range was high of 139.11, low 138.57. You have an outside day up. So I could really take this arrow away now that I've seen the close and say I've got higher lows, higher high. The settlement at 138.66 is well under 139.43. So while the swing line could be up, the momentum is down and you're oversold. Again, a confusing chart picture. In the dollar index, the trend turned down today. You've got the pattern of lower highs, lower lows. Now, that could be negated by taking out yesterday's high, which was 97.70, and that would probably put you into the resistance zone of the, that's a friend. I'll call him back. That would be the resistance zone of 97.80 to 97.86. So I'm watching to see what's going on right through there. But that could be an interesting play. That could signal a bottom area in this market. Even though you would be at the resistance, you'd have higher lows, higher highs. In the eurocurrency, we just opened, by the way. So these are the reopening. That's why you saw the chart jump. That wasn't me. You've got lower highs, lower lows, but bias is up because you're over the 18-day average. In other words, you're not getting confirmation that the market won't stay in a downtrend. It's hit 3 days, not including today, of hitting that 18-day average. Again, that magic line where the market so often tries to figure out what to do next, and it's overbought. In the British pound, we have the pattern of higher lows, higher highs. You've gotten over the upper Bollinger Band, but the only question I can ask is, do you want to go through the election on December 12th? If you do, So far, the trend is up. If you take out 131.04, it'd be a warning sign. The Bollinger Band, the slow stochastics have embedded. So until the red line closes under 80, the bulls have grabbed control, but they've had control. You've come out of this sideways action that we've been talking about, and this is classic sideways action. And once the market got up and over, it never looked back. It just kept going. And you often, when you break out of that real narrow sideways action, get overbought or oversold. It's not uncommon. So you had a couple of days in a row over the band, then you got back under, and that's where you're fighting a battle right now. But again, your risk is pretty large because I don't know that this election is in anybody's bag right now. Winning is not the key. You got to get a majority in parliament. In the December Japanese yen, you're stuck in sideways action, right at that 18-day average. Your momentum has slipped on you. The trend had been up, but now you've got bias down. I think this market is marking time, waiting to see these events unfold, because so often people run to the yen as a safety hedge. In Bitcoin, you're still in a downtrend. Lower highs with these lower lows. Momentum is flat, but the bias is down. The bears still control this. The risk in the factor is you don't want to get over this number, which was 77.05. As long as you don't take that out, you still have the potential for the lower Bollinger Band. In the Brent versus WTI crude, we saw a net build today at the end of the day in the API data. Yes, they took down crude oil by about 3.5 million barrels, if I'm right, but I'm doing this from memory. I looked at it for maybe 5 seconds. Tomorrow's EIA is going to be just as important. And what do we have coming up tomorrow? The Saudi Aramco IPO. They're still trying to hit that $2 billion target, as I read a report late in the day in the Financial Times, where the royal family is pushing the Saudis, buy our stock. Okay, but after they buy it, what happens? And what happens here? If you have in the Brent or the WTI, no U.S.-Chinese trade deal, you think that's friendly for these markets? I'll let you decide that, but I have my own opinion. Higher low, higher high. By the way, if they give an extension of 30 days, I would think that would be at least neutral to slightly positive on the energies. And a deal would obviously be friendly. More tariffs? I don't think you'd be looking at these markets up Sunday night. Higher lows, higher highs in WTI, and we were on the Brent. You can see you've got the same pattern there, but both are in very overbought territory for the moment. When you come to gasoline, we've got lower high and higher lows. I'm going to call this market neutral right here, fighting at the 18-day average of closes. You got a little bit away from it today, but in the evening trade, because I saw that they built in gasoline and distillates, that's weighing on the market. Natural gas, can you fill a gap? Now, what do I mean by that? Right through here. If you look at the Fed gas, you got as low as 231.30, and that was the close of business Friday. You gapped sharply lower on Monday. You're now trying to fill a little bit of that gap, and even tonight the market is working at that. And you can see what the prices look like behind me, and you've got a very mixed bag in so many of these markets. Interesting time. And with that interesting time, my Cyber Week sale will end on Sunday. So for those of you that have been looking for that situation, and I've never offered this, so I can't say I've matched this ever. This is where I'm throwing in my charting course for free. It's $179.95 if you go to our website. You're welcome to buy it there, and I have a lot of people that buy it at that price. But I'm throwing it in with any one-year subscription to any of my research products, and all you do is go on our website, www.iraepstein.com. Under the word research, it explains them all, and you can decide if you'd want one. In the course, there's about 5.5, 6 hours of videos. You see what I do, then with the charting software, you do the same thing. And yes, this is data that's intentionally altered. In fact, on a number of the charts, I remove the name of the chart, I remove the scales of the chart. I want you to learn patterns. I want you to learn how to draw the swing line by hand. Yeah, there's an indicator in our charting software to do it. Probably not in your charting software, but in ours. Then moving averages, very typical, but I also do animation studies with all these. So you see the concept, you learn how to do it, and I walk you through time and time again as to at least my analysis of what you do with these. You've not seen window envelopes because there's too much to cover in these videos, and a lot of the stuff I keep for my subscribers. So what you get is all this, trial to it, $179.95 value, and some of our research starts at $156 for a year. So it's not a bad deal. I make you a promise, it ends on Sunday, and it won't come back. That's done for this year, and I don't know if I'll do it again. But if you'd like to learn more, all you need to do is go to our website at www.iraepstein.com. You can either look at the research product and or the course itself so you get a feel for what it is. You need not start the course now. You can start it whenever you're ready. We've set up a pattern where when you buy our research, we send you an email out. It tells you how to get hold of us, so we turn on the charting software and get everything set up for you at the right time. The research will start right away for you, though. I want to get it in your hands because these are important times. In the meantime, you can always call us. I'm Ira Epstein. You have a good day.